Rethinking investments, the dilemma of relying on past MF performance. If you base your investment decisions on past performance alone, you're embracing rear-view investing. Do you still find this strategy effective? Investors often face setbacks by chasing the previous year's top-performing funds and making hasty investment decisions based solely on historical performance. The disparity between fund performance and investor returns arises when investors pursue past-year performance, resulting in mistimed entries and exits, affecting their actual returns. Why this happens? Relying solely on the previous year's trends for investments might lead to disappointment, as these trends might not continue. This approach overlooks the importance of understanding a fund's strategy and prevailing market conditions. Let's now analyze our mutual fund industry and observe how your portfolio might have performed had you opted for this strategy. If you had reviewed the performance table 5 years ago, on November 20, 2018, for large cap funds and chosen the top 3 funds. Do you have an idea of how your investments would have performed by now? Having chosen the fund on November 20, 2018, it's been 5 years since. Let's evaluate their performance now. Upon reviewing the last 5 years' performance, you might observe that most of the funds have declined in their performance ranking. Let's also examine another category, large and mid-cap funds, to understand performance ranking changes over 5 years. If you had reviewed the performance table 5 years ago, on November 20, 2018, for this category and selected the top 3 funds. Since selecting the fund on November 20, 2018, 5 years have passed. Let's assess the performance of the large and mid-cap category. Indeed, across the 4 main categories, the funds that held top rankings 3 or 5 years ago have typically slipped and underperformed, reflecting lower positions in the latest performance rankings. Consequently, investors who continuously switch from one fund to another, solely considering last year's performance, often suffer in terms of returns. Rear-view mirror investing keeps you fixated on the past, while the road to success lies ahead. The allure of historical success can overshadow the need for a comprehensive understanding of current market conditions and the unique dynamics influencing investments. Relying solely on past performance neglects the evolving nature of markets, potentially hindering the alignment of investments with future prospects and goals. Ultimately, basing decisions solely on historical success limits the potential for maximizing returns and adapting to changing market landscapes.